First up, Jeff from California asks you, Lee, what was the biggest investment mistake you learned from during your career?
Biggest investment mistake. I guess you can parade my mistakes up Fifth Avenue 5 abreast. I invested in the voucher privatization program in Azerbaijan based upon the recommendation of one of my colleagues. This was 1998. It was a very, very bad outcome, so I would say that would be a big mistake. And then I bought into a mobile payments company called Monetize, and it turned out that they were being disrupted rather than being a disruptor. But, you know, in this business, if you don't swing the bat, you don't make. Anybody who doesn't make any mistakes is either a liar or doesn't make decisions. Your winners got to be more plentiful than your losers. And again, to quote Warren Buffett, he said, like in the investment lifetime, you know, it's like a cafeteria punch card. It's, you know, you're hoarding harder. You went in a cup of coffee, you get they punch your ticket. You bought a sandwich, they punch your ticket. You get a certain number of great ideas in your lifetime, and you got to know and smell when that idea is a great idea and be properly weighted. But you're going to make plenty of mistakes. I've made them. Believe me, I've made them.
We have another one from somebody pretty close to home. Our own Joe Terranova from the Halftime Report writes, Lee, are you surprised with ADP trading $137? Is it fair value, overvalued, or still undervalued? Of course, we know your past service on the board there and your history with that company.
Yeah, well, my point when they were under attack was that this was a fabulously run company. This was a record that's almost unparalleled in American industry, and the company didn't deserve to be attacked. I think they went public, from memory, 1961 with a market cap of $15 million. The market cap, correctly calculated, is probably $60 or $70 billion. It's a compound rate of growth of 17 or 18% over 50 or 60 years. They earned 35% in equity. They return about 60% of earnings in the form of dividends. It's a great company. I haven't looked at the numbers recently. Like I said, I made a big mistake when I retired from the board. I gave all my stock to charity. I should have given cash and kept the stock. But I have a very high regard. It's a great company. Absolutely have challenges like most companies, but you didn't get to where they got in the business world without them being astute, and they understand their challenges and they're dealing with them. But I'm not prepared, Joe, to render an opinion because I'm not current on the numbers.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.